What really jumps out to me, and I want to revisit this, is Microsoft and the fact that you do not own the stock as we have this conversation. Is that correct? Because that's how I read it. And I want to know why, because somebody like you who owns Amazon and Nvidia and Alphabet and Meta, choosing not to own Microsoft is a statement, whether you want it to be projected that way or not. To somebody like me, it is. Tell me more.
Well, listen, Scott, first, as you know, we've owned Microsoft a lot over the course of the last few years. I think Satya and Amy are doing a terrific job, and we'll own Microsoft again. But you have to make choices in this market. We only have so much capital. 80% of our capital has been in memory and logic and compute. You know, companies like Nvidia, companies like SK Hynix, companies like CoreWeave, et cetera. And so that's consumed a lot of capital. The capital has to come from somewhere. And when we looked at Microsoft, right, we thought they were investing a little less aggressively in CapEx to drive that future AI growth. And on the other side, a big part of the business is software, and there's a lot of skepticism about software today. Now, I happen to think that they're seeing tremendous activity on the software, the productivity side of the house. I think that business will accelerate in the future. But we were right in trading out of it a bit because the stock has come in, and the stocks that we rotated those dollars to, like SK Hynix, has done incredibly well. So I wouldn't make too much of a statement out of it. I think it's an incredible business. They're going to do great. They're definitely going to be on the winning side of AI, but that's why we made the change.
Speaking of memory, do you think those stocks have gone too parabolic, too crazy, what we've been seeing in certain parts of the chip area?
So first, you know, if you look at the multiples, the fully taxed GAAP earnings of those businesses, the multiples are actually flat to down, Scott. They're trading at 5x fully taxed earnings. Samsung's going to do more in profits this year than Google. And so the question has always been, why the hell do these companies trade at 5 times earnings? Because people think it's a boom and a bust. There's no durability to the earnings. If you believe it's different this time, if you believe there's durability to those earnings through 2028, through 2029, which we do, and could be much further out, then these are ridiculous values in the public market. We maintain them as some of our largest holdings. We think they will continue to compound. And we think, I'm going to do a pod on this in a couple weeks with the CEO of Micron. I think there's some industry restructuring going on that will be good for the long-term health of the business. More collaboration between them and the hyperscalers that perhaps will give people more confidence about the long-term durability so that it's not so much of a boom and bust anymore.
Well, when you look at some of the other chip names, I mean, the gains in the last month are extraordinary. Doesn't even begin to tell the story of an AMD, for example, which is up 57%, or a Broadcom, which is up 31, and so on and so on and so forth. What level of pause, if any, does that give you about where these stocks have gone?
I mean, listen, you got to make choices. Some of these stocks, understandably, have been memed because people have gotten really excited about the CPU super cycle or the GPU super cycle. We just had this conversation. Obviously, token consumption is exploding. I think that will continue. But look at Nvidia at 195 bucks. Nvidia is trading lower than it was 6 months ago. So it's hard to say at 13 or 14 times fully taxed earnings on a business that's giving you guidance of $1 trillion of future orders. It's hard to say that that's in bubble territory. I look forward to hearing from them in a couple weeks when they report. But I think Nvidia is terribly underowned. I think it's terribly undervalued today, and so we're happy to sit in that and to own it. But I agree with you. If you look at ARM, which is another one of our big holdings, it's doubled in the last month. Clearly, Lisa's doing a great job. Look at what Lip-Bu is doing at Intel because of the shortage in CPUs. And so I think you have to, listen, when anything goes up 100% in a month, Scott, for retail investors, they shouldn't feel bad about taking a little profitability, right? This game is either like hold it forever and let it compound, or pull a little profitability off when you think the market is getting ahead of itself. I'm just telling you, when you look at Altimeter's net exposures month over month, when the market pulled back on fears about Iran, we didn't run away from the market because we saw fundamentals accelerating. We pushed more onto the table. We've continued to make sure that we have our dollars in the things that we think are best valued, but our aggregate exposure is very long the market. We believe the market goes higher from here. Hopefully we get the situation in Iran solved sooner rather than later. $120 oil will take its toll on the market if we don't solve that over the course of the next 3 to 4 months.
Jim Lebenthal's got something for you on Nvidia.
Hey, Brad. Good to talk to you always. Agree with you on Nvidia. Agree with you, by the way, that we all have to be long-term investors. If you could just dig a little deeper on maybe what the most recent 6 months malaise, I'm going to call it that, in the stock price has been. Do you think it's competition that has cropped up maybe from the hyperscalers like Alphabet, like Amazon, or maybe even competition for capital? I know you've got Cerberus, and they're going to go public here, really quite soon. You mentioned Intel, so maybe this is just short-term competition, either for capital or for the actual chip demand. I'd love to hear your thoughts on that. Either way, both of these should pass, right?
Joe, it's the exact right question, and 100%. The reason it is traded off is because people believe, I think incorrectly, that all the share is moving to Trainium or to TPUs or to Cerberus. I'll be in New York next week for the Cerberus IPO, where I was on the board and a major shareholder. But here's the thing to keep your eye on. Token per watt per dollar. Nvidia is one of the most efficient in the world. Where do you think that ChatGPT 5.5 was trained? On new Blackwell chips. We got Vera Rubin rolling out later this year. Notwithstanding all of the noise in the market, the pie is growing so much that it's a much bigger slice of the pie for Nvidia, even if they're giving up a few share points to Trainium or to TPUs, which are also good products. But on a token per watt basis, Nvidia is still the best in the business. When they roll out the Vera Rubin LPX clusters later this year, remember LPX came from the Grok acquisition that they announced at the end of last year. That's going to be another huge step forward for these models. So I think Nvidia is in an incredible position. Like I said, I think you'll hear from them on earnings, but that is definitely what the market is worried about. But I think if you just look at the numbers, $1 trillion over the course of the next, 6 to 8 quarters, I think speaks for itself.